All right, traders, welcome back. Dev Group, we coach traders worldwide, show them how to use systems and automation to remove the fear, the greed, and fear of missed opportunity from their trading on a day-to-day basis. In lesson 1, we looked at the RSI two-step trading system. We looked at the buy-side entry specifically, and I showed you how simple it is to use an if-then thought process to identify not only a trade entry, but how to confirm it with price action. In this one, we're going to take a look at the sell side on the two-step system, and again we're going to focus on relative strength index. It's a simple indicator. Everybody has one on their charting package, so regardless if you're using TradingView, Thinkorswim, Introducer, or Interactive Brokers, MetaTrader 4, it does not matter. Let's get into the charts. Here we got the RSI. Now remember, we came in with an RSI 55. Okay, RSI 55, Fibonacci sequence number. We modified our style. We have our upper band set to 54. We have our lower band set to 44. Now previously we took a look at what I call tendencies, and those are tendencies in the market. So again, what you want to do is you want to ask a question. If this is happening on the indicator, then what tends to happen next? I want you to identify swings in the market. We noticed that we had a resistance point right here in price action. This happens to be crude oil. And then we took a look at a real simple two-step process for trade entry. So number 1 was we wanted the RSI, and with RSI 55 above 54, it occurred here. We then waited for a second piece of information, a confirming indicator, if you will, and that was we want to look left and make sure that price is trading above recent structure resistance. So on the close above right here, we have an RSI making a new high, confirming that higher close. That produces the buy signal. So on the sell side, we look for just the opposite. So right here, we note price is broken below structure support. And you'll note down here, price breaks below the RSI 44. So again, RSI 55 drops below the 44 zone. At the same time, we've got price making new structure lows. So let's take a look now at what happens next. Again, traders, I want you to watch as your RSI goes lower down here, your price action is making lower lows. So we want to look at very simple verbiage. So we say if we're getting lower lows and lower closes, or L3C, with RSI making new lows, that means our relative strength is confirming price action. So the relative strength of the short entry of the sell side is increasing as price makes new lows, confirming that. Okay? So let's add that to dictionary, click OK. Now the other thing, remember, is that we want to see when we start to lose that momentum. So let's go ahead and we'll start to watch as we start to lose the momentum. From the short entry right here, where our RSI drops below, let's just call it $52, we have a 50-cent move against us. This happens to be, again, crude oil. And you'll note RSI never comes back above 50. So that's the other thing. You can drop a horizontal line in here. Again, this is TradingView. Or you can have a custom indicator that just shows RSI with a 50, and then obviously your upper and your lower zones. So price continues to move lower. And here we talked about introducing a simple moving average as a trail stop. So let's introduce that now. Let's go to indicators. Let's go to SMA. Moving average. We'll go ahead and use an exponential just for grins. We apply the exponential moving average to the chart. Now, you'll note here, obviously, that we have some conditions that are met. If price is moving lower, let's go here, then obviously price is opening and closing below the moving average. Let's go to the inputs on the exponential moving average, and let's go up to a 13-period EMA. Let's just have a quick look. We want to make it close enough that we exit the position, but we want to make it wide enough or far enough away from price that we don't get taken out on every normal retracement in a market. So you'll note the 13 period exponential moving average right here gives us the opportunity. We get short. Price pops up right here. We have a 50-cent move against the position. We do not trade above and close above our EMA. We then get a beautiful decline from $52 down here to $50.61. That's a $1,400 move in crude oil before popping back up above that 13 period. Now, our Fibonacci number just below that is an 8, so let's pop in an 8. And you'll note that price gets significantly closer to that EMA. So if you want your moving average trail stop to be more aggressive, use a lower number or a smaller number here. There's a 5, 6, 7, 8. And what you want to do is come in here and visually look at the chart. Typically anything less than a 13 is going to be too aggressive. Let's maybe 11. So there's an 11 period EMA. You want to make sure that based on the conditions of the market, when we get the sell-off right here, we have an RSI decline right here. Typically it's a quick move. And we want to participate in those sell-offs when they occur. No different than what we saw over here. Here was our buy side. We pulled back a little bit, but we didn't close below our moving average. We came in here at the open of this candle on the 1 hour, traded below it, then closed back above it. And then finally we saw a close right here on the buy side if we use the moving average. The other thing we can do is we can watch the RSI and say if RSI goes oversold or below 40, below 30, whatever it might be, then I start to employ the moving average. Either way, you can employ that moving average. The key to this, traders, is you want to remove the subjectivity. You want to take all subjectivity out of the trade. If you leave the subjectivity in that, then you're likely to change your mind while the trade is on, or intra-trade, inside of the trade. Right here, the market looks incredibly bearish. Okay? Remember, this is a great point I was taught by a mentor over 2 decades ago. The markets look the most bearish at the bottoms and the most bullish at the tops. Right here, price had just made a new structure high and a higher close. It closed in the upper 5% of the candle. It opened in the bottom of the candle. And what happened? It stopped on a dime at 54.80 in crude oil and rolled over $2 full, or 200 ticks, which is $2,000 a contract. So again, looks the most bullish at the top, looks the most bearish at the bottom. Right here, we just made a new structure low, lower close. We stop on a dime. Now there we do have a bullish engulfing candle. The RSI turns up quickly, and literally from the lows right here at 50.57, we pop straight north 100 ticks, which is $1,000 a contract. So let's review real quickly. We had the close above, and then we wanted price action to break above and close above a recent swing high. I call that kind of a chop stop entry, but waiting for that confirming candle to break structure resistance keeps us out of trades where we bang our head against an overhang, a structure resistance point. Confirming right here doesn't guarantee we're going to have a winning trade, but that additional price action confirmation really can have a positive impact on the overall system. Then we took a look at potential divergence. We had made a high right here. We popped up. We made a slightly higher high and then rolled over. We looked at the same thing on the sell side. This previous area of resistance, we broke above it, closed above it, had a beautiful buy side winner. We came right back down to it a couple days later. We found support at that level again. And then here, not only did we break below, close below, we opened right on it, closed below it, and then we were able to sustain that held trade right here below it. So look for market structure, confirm your entries on your RS2 buy side and sell side trades. Now, I want to show you what happens as we continue to move forward. Again, I want you to note, not only do we break below, close below 44, but for the duration of this trade, we press here, we make lower lows, lower closes. You'll see right there, relative strength again breaks below 44. Relative strength, price right here breaks back below our exponential moving average. So we come back to our text tool and we say re-enter if we have price at close is less than EMA, and we're just going to use the EMA that we currently have on the chart, and we want this to be present as well. RSI 55 is less than 44. If both of those two conditions are present, we want to sell next bar market. Okay, and again, in future trainings, I call that an NBM, next bar market. So ask yourself the question, A, is price closing back below our exponential moving average here? It is. Condition 1 has been met. At the same time, here let's expand the price. Right there, is price below 44? It is not. Okay, right here, do we get a close below the exponential moving average? Yes, condition 1 met. Do we get a close below 44 right here? No. Condition 2 not met, no entry. Right here, do we close below the EMA? Yes. I want you to think just like a mechanical system. Right here, is the close below 44? Yes. Then we want to sell the next bar at market. All right, now let's take a look. We sell the open of the next bar. Our protective stop has to go above the prior swing. Look left, right there's your swing high. So you see that we're risking a full point in crude oil, which is 100 ticks. If you're trading the full size contract, that's $1,000. So we want at least a 1-to-1 risk reward ratio. So we'd look to make at least $1, and we'd prefer to make $2. So let's look for a $2 move. There's the $2 move, and you can see right here is where we hit our $1. So from our point of entry at 51.32, right here we hit 50.32. So right there is our 1-to-1 risk reward. That's $1,000 in the pocket. We have our stop trailing above the swing right here. From our point of entry, 1, 2, 3, 4, 5 bars later, our moving average has come down to where the value of the moving average is equal to our entry. So 5 bars into the trade, now we're back at break even. We have no risk in our position. Let's continue to walk forward, and let's see if we come down here and hit 49.36. And you'll note right here, again, we press our moving average, our exponential moving average for our trail stop. You want to take that, either take the value of the exponential moving average and add 10, 15, 20 ticks to it, or require a close above it. A close above it's relatively easy to write from a coding perspective, and obviously it's easy for you to watch if you come back to your charts and just look at the close of every 1 hour candle in this case. But you'll note right there was our target for a 200 tick winner, which is $2,000, which is 2 times the $1,000 of risk, and obviously these numbers are much smaller on smaller time frames. And you'll note right here, price made a new structure low, lower close. We traded below this low. Let's drop this in. At this lowest low right here, this was our low on RSI. Over here, price made a new structure low, lower close. RSI also took out that previous low. And in the advanced lessons in the course, I go into how to use your RSI swing highs and swing lows to further help you identify. Now, note right here, we pull back up. Right there, we make a new structure low with a lower close in price, and look at what happens on the RSI. So again, we have relative strength confirming our new lows as price makes the new lows. Here, confirmation of new lows, and even on the rally in price, RSI remains not only below 50, but below 44. Then price makes a new structure low right here. Let's take a look at on the new structure low. Now we're down $2,170 per contract. We get confirmation right here. Let's continue to walk forward. And then right over here, we finally get the close above. So note, here's our lowest low. Note the value of the RSI. Double bottom, we retest that previous low. It's $49 in crude. And as we retest over here, you'll note the RSI makes a slightly higher low. and then we start to pop back up right here. So there's your clue. We might be losing the relative strength of the sell-off. So if there are fewer sellers right here, then we want to A, take profits, B, trail stops. So there's your sell side trade. Now we introduce the exponential moving average here. You could use a simple moving average and multiple types of moving averages for your trail stop. Now in the next lesson, we're going to take a look at average directional index and look at a way to incorporate that into your overall trading model that will even further enhance the profitability of the system and offer further confirmation for significant bullish and bearish momentum. I'll see you in the next session.